Welcome to The Bull versus the Bear. Today, we are diving deep into Meta Platforms. This is a company that's pulling in record-breaking profits, but at the same time, it's spending a truly mind-boggling amount of money on the future. And that, right there, has Wall Street completely and totally divided. And that really gets to the heart of it, doesn't it? Is Mark Zuckerberg's plan to pour over $100 billion into AI a total stroke of genius that's going to lock in another decade of dominance? Or is it just a reckless, insane gamble that could torch the company's fortunes? In this slide, man, it just lays out that core tension perfectly. On one side, you've got the juggernaut, record revenue, a dominant user base, and an ad business that's being supercharged by AI. But on the other side, you've got the gamble, record spending, more and more scrutiny, and what some are calling the AI YOLO trade. Basically, a massive all-or-nothing bet. It's a classic showdown. So here's how we're going to break this all down. First, we'll set the stage with Meta's huge gamble. Then we're going to dig into the bull case, why this could be an absolutely brilliant move. After that, we'll flip it and cover the bear case, why so many investors are, frankly, terrified. Then we'll crunch the numbers, and finally, we're going to turn the verdict over to you. All right, first up, this setup. Let's really get into Mark Zuckerberg's all-in bet on artificial intelligence. So what's so wild is how the market reacted to Meta's last earnings report. They posted record revenue, so you'd think the stock would soar, right? Well, wrong. It dropped. And the reason is that management announced this staggering increase in future spending, and it just completely spooked investors who are now worried they'll never see a dime back on that huge investment. But to really get why they're spending all this cash, you have to understand the bull case. So let's explore the argument for why this spending isn't just justified, but why it might be absolutely crucial for unstoppable growth. And it all starts with this one number, 3.54 billion. That is how many people use a Meta product every single day. Look, that's not just a user base, that is a global digital nation. And it is the bedrock of Meta's incredible power and, of course, its profitability. So here's the key thing for the bulls. They look at that massive and still growing user base as the ultimate weapon. They argue that the AI spending is already proving its worth, making the core ad business way more effective, which gets advertisers a better return. This is already leading to faster revenue growth and more pricing power. And that's not even mentioning the huge untapped potential in things like WhatsApp and Threads, all backed by a balance sheet that's basically a fortress. And here you go. Here's the proof in the pudding. This isn't just some theory. The AI investments are clearly working. The number of ads being shown is up a really healthy 14%. But more importantly, the average price advertisers are willing to pay for those ads is up 10%. When both volume and price are climbing like that, you know the engine is absolutely firing on all cylinders. Okay, so that's the sunny, optimistic view. Now let's flip the coin and look at the bear case, the argument that Meta is just setting giant piles of cash on fire. And whoa, the bear case kicks off with this absolutely jaw-dropping number, $73 billion. That is the total operating loss so far from Reality Labs, the metaverse division. For the bears, this isn't just a number, it's a track record. It's proof that the company is willing to burn through mountains of cash with very little to show for it. And this quote right here, it just nails the fear that investors are feeling. They hear massive spending on a futuristic technology, and they get this kind of PTSD, these flashbacks to the metaverse bet. They're worried this huge AI spending spree is just history repeating itself, another black hole for cash with no clear way to make any of it back. And the spending, it's not just high, it's accelerating at a ridiculous rate. We're talking from around $30 billion this year to about $70 billion next year, and then maybe over $100 billion in 2026. I mean, that trend is just going vertical, and it puts immense pressure on the company to deliver results and to deliver them fast. So let's just wrap up the bear thesis, right? The spending is just out of control with no guaranteed return. Reality Labs has proven to be a money pit. You've got the company fighting regulators in both the US and Europe, and on top of all that, they're facing brutal competition from rivals like TikTok. For the bears, it's just way too much risk. So you have this incredibly profitable machine on one side and this colossal spending plan on the other. How on earth does the market even make sense of this? Let's look at the numbers and see what the stock is actually worth today. Now, on the surface, the valuation doesn't look too crazy. The forward price-to-earnings ratio, at about 22, is actually a little bit below its 5-year average. and the PEG ratio, which factors in growth, is right in line. But here's the catch. These numbers reflect where we are right now, and they might not fully capture the risk of that massive future spending we were just looking at. And if you want a perfect picture of just how divided everyone is, look no further. Even the pros on Wall Street can't agree. You've got price targets from $825 on the low end all the way up to $915 on the high end. That huge spread just screams uncertainty. Nobody knows for sure if this big bet is going to pay off.
Okay, so let's bring it all home. Time for the final verdict. So it really boils down to this one single battleground. Are you betting on the bull case, an unstoppable AI-powered advertising machine with a scale the world has literally never seen? Or do you believe the bear case, that it's a money pit just burning cash on speculative bets while trying to fight off regulators and competitors?
And now we're handing it over to you to be the judge. Based on everything we've just covered, what do you think? Are you a bull or a bear on Meta? Is this an AI-fueled juggernaut or is it a high-tech money pit? We want to hear your full thesis. Drop it in the comments below. We really do read every single one. And hey, if you enjoyed this breakdown, make sure you subscribe to The Bull versus the Bear and check out our other analyses. Thanks for watching.